How to profit from huge inflation in 2022. Many have expressed concern over the current high inflation and some investors anticipate big losses. Well, in this video, we will show you key strategies on how to profit from inflation so that you can reap the benefits from our current economic situation. Hello and welcome back to WealthMatic, your regular dose of wealth and millionaire inspiration. Here we talk about everything related to money, wealth, and success. Feel free to chill as this is a place for you, future millionaires out there. Now, inflation has become a major source of anxiety for many traders lately. You see, this is really something we didn't have to think about for the previous 40 years or so. We've continued to hold it around the 2% range, which is pretty ideal. However, other investors such as Michael Burry are predicting that inflation is on the way. But I'd like to give a quick disclaimer before we proceed. I may have experience in finance, but I am not in any way a financial advisor. I only deliver knowledge in a fun and informative way. However, if your money is on a serious decline, I highly suggest that you are a financial advisor to help you with your situation. But the most crucial topic we'll cover is how to benefit from inflation. Back in the 1970s, there were more young folks than pensioners. It's now the other way around, with more pensioners than young people. When it comes to the point of people's working age, all of these growing economies are dropping. China is shrinking rather than increasing. Affluent countries are doing the same, and even Eastern Europe is doing the same. This drop is significant because you have fewer capable people working in a smaller quantity. The volume you can create decreases, and the cost of labor rises. Now, firms that hire people pass this price on to customers, resulting in an increase in the price of goods and services, referred to as inflation. These are just a few of the things that we must be mindful of in order to avoid future excessive inflation. But I guess the big question is, how would we profit from inflationary periods? And at the very least, avoid taking a loss, given that many of us have never encountered such high inflation previously. The last time we experienced high inflation was in the 1970s. We don't often see our currency depreciate, treasuries and some equities vanish, and other types of assets get devoured by inflation. You must understand which asset types perform successfully. Purchasing real estate is one of the finest possibilities and one that I myself am exploring. So, let me teach you how this works mathematically. So in an inflationary situation, the very worst asset class to be in is cash, because your currency is plainly losing value. Now, what is the total opposite of monetary debt? So instead of nibbling away at your money, inflation erodes your lives. One advantage of real estate is this, but then there's inflation, which affects the prices of your home. As inflation grows, the price of just about everything, including homes, rises, which is another plus for real estate. However, if inflation rises, so does your rental revenue. Then you're making money in a variety of methods with these assets. And then if you play your cards right, you could make a fortune. You could either buy the property outright, or if you wouldn't have the funds, you may invest in property through REIT, or Real Estate Investment Trust. However, real estate is not the only investment that can be profitable during inflationary times. Gold is another asset that does well in this market. Now allow me to clarify. Inflationary eras cause shareholders' cash to lose value, and no one likes to hold money. And they wonder, what is an asset class that maintains its worth over time, has a restricted quantity, and cannot be devalued? Gold is one of those options. As a result, when traders begin to see inflation, they rush to gold, which rises in value. And if you take a look back, you'll notice that the last time there was a time of high inflation was from 1970 to 1980. It was fairly high there, ranging from 5% to nearly a whopping 15%. And what happened to gold's value during this moment? It flew up and up and up, from around $250 to over $1,000. That's why gold is a strong asset to buy during inflationary periods. However, you want to get it while it is still affordable. And yes, I am indeed of a gold lover myself. And now there's another thing that's quite likely to happen. Another option for traders if inflation rises is to turn to digital currencies, such as Bitcoin per se. And I'm aware that many people are opposed to this, and I'm also aware that it hasn't stood the test of time just yet. Bitcoins have only been around for a decade or more, We do, however, have the rationale. So, let's discuss. When it comes to inflation, the most important thing to remember is that your money is depreciating. We've already described how it's printed and printed again, and how it's been watered down to make it less efficient. We can't water down Bitcoin anymore, because there are a finite number of them in the world. There are just 21 million available. As a result, people are turning to other ways of payment, and one of which is Bitcoin. This isn't a guarantee though. Humans don't have any historical evidence to back this up. However, I strongly believe that if we see hyperinflation, Bitcoin will skyrocket. So we have rental properties, gold, and Bitcoin, all of which are commodities that will perform well in an inflationary situation. Now, another item to consider is what stocks will do well in this market and which do not. Now, I'll demonstrate this to you. To demonstrate this, we'll use the instance from Warren Buffett, the greatest investor of our time, who has spoken extensively about stocks and inflation previously. Whenever it comes to high inflationary times, you should concentrate on equities that have 3 crucial characteristics, and you should jot this down. One is the capacity to make money rather than spend it. The second is to invest in businesses that can readily raise prices in line with inflation. And lastly, the third is to invest in businesses that can handle huge dollar volume growth in the company with only a few extra capital inputs. Even with just a stock like Coca-Cola, which is one of Buffett's long-term investments, it should be less concerned about inflation than most. They can boost their pricing as inflation rises. And because they're a cash-flowing corporation or have a share like Sanderson Farm, they can simply enhance chicken pricing to keep up with inflation. If we're going to see significant inflation ahead, you'll want to invest more. Now don't get me mixed up. When inflation rises, it may be a nightmare for your money. Hyperinflation, as Thomas Sowell put it, can eat up practically all of your retirement money without the state having to raise formal tax rates and whatsoever. Now this, however, does not exactly have to be the case. Inflation does not even have to take your money altogether if you make investments wisely. In reality, by making savvy bets in the appropriate kind of equities, gold, estate development, and perhaps a small number of bitcoins, you can benefit where others might suffer great losses. And that generally concludes this video. I hope you learned a thing or two. If you want to elevate your life from the one that you have to the one that you deserve, click the subscribe button right now. This has been the one and only WealthMatic, and see you on our next video.